By Peter Kurz. He's Citigroup Head of Taiwan Research, also known as Mr. Taiwan as well. Peter, thanks for joining us. Let's first up, tell me what you make of this move.
Well, it's obviously it's historic on a number of fronts. Steve touched on some of them already, but also bear in mind that Taiwan has been a very quiet capital market for most of the past 10 years, and suddenly we have seen again, Taiwanese companies coming back, and now, of course, Chinese companies coming to Taiwan to list, which is, I think, going to not only create greater diversity in the Taiwan stock market, but also draw more capital in, both local. There's a lot of money sitting in bank accounts here in Taiwan, of course, as well as foreign money. And so hopefully it'll help drive the market higher in the long run as well.
I mean, are we going to see more of this now? Is that, you know, now that, will it be sort of like the one which breaks the dam?
Well, again, we've seen a number of these TDRs, which were fairly high-profile names coming in the past, and there are going to be a number of, I think, more interesting Taiwanese businesses that have been operating in China, coming to set up to list in Taiwan as well, as primary listings, if not as TDRs as well. This is, again, going to energize the market. It's going to focus a lot more attention on the domestic demand sector. Of course, Taiwan stock market historically has been a tech-driven market, rising and falling with the prospects of that industry. Going forward, we're seeing at least a short-term, possibly a long-term slowdown in tech exports, and tech sector itself has been seeing some pretty heavy selling pressure. This could create a new venue for that money to move in, keep it in Taiwan, and again keep the market moving again possibly higher in the long run, but certainly keeping more activity. We've also seen a lot more trading volume of these stocks that have been listed in Hong Kong, listing their TDRs in Taiwan. Certainly, as a percentage of the shares that are listed, much more liquidity in Taiwan. That should help valuations for these companies as well.
It must speak volumes, though, at the moment, this move, about relations with the mainland looking ahead.
Yes, I mean, certainly there is it's a historic event politically as well, and there's been just a complete turnaround in the nature of cross-strait relations over the past couple of years since the Ma administration came into power. You know, obviously the signing of ECFA and the ratification of that this month, in August as well, all I think going to be an important milestone for Taiwan, creating what I think is going to be a capital spending boom here. And it's going to be more the traditional industries that will benefit from this opening, again, particularly as we see tech sort of decelerating in its growth pattern, and new industries such as the automobile, steel, or materials in general, all benefiting from greater access to the China market. And of course, I think greater focus in Asia itself on domestic demand, which these non-tech industries will benefit. In the very immediate term, I think it's going to be the Taiwan banks that will be the biggest beneficiaries, because we are going to start seeing an increase in capital spending, which will generate corporate loan growth, and that's something we haven't seen for some time.
Peter Kurz, thanks very much indeed for joining us. Peter Kurz from Citigroup there.